Hey guys, welcome back to another video. Today we're going to do some trading. We're going to close some contracts and we're going to buy some contracts for next week using the wheel strategy where you sell puts and then you sell calls. So right here you can see that today we are up about $900, 1.32%. For the week we are almost 3 grand. For the month over 12 grand. 3 months 23k and overall 27k. This started back in December of 2019, so it's not bad at all. So looking at the right side, we have our stocks, we have our options. We're going to close TNA, Wells Fargo, and we're going to sell them for next week so we can earn premium for next week. So let's start with TNA. TNA right now, it's to close the contract, it's going to be about $2. So we're going to buy to close in order to get our collateral back in order to sell another contract for next week. So let's go ahead and do that. You order submit, it's going to cost $2, and there you go. Now the contract was purchased, so now my $3,200 has been released. If I go for next week, sell another put on TNA, I'm going to sell it at 33, make $66, $67 in premium. That's not bad, because if we take 66 or 68 right now and we divide it by 3,300 as my collateral and we multiply that by 100 to get our percentage, that's a 2% return on our money, which is great. So I'm gonna go ahead and move forward with that. You can see it's 67 now, but it's not really a huge deal when it changes a dollar. Okay, now we gotta wait for that one to execute. So meanwhile, we can go to Wells Fargo, and this is where I bought 100 shares of Wells Fargo. I ended up selling a put and I put it in my dividend tracker, in my portfolio tracker. And you guys can see that last video I ended up on the 14th. I made $75 of premiums. It was the worst week yet. But now on the 21st, I sold a couple more premiums for AMD and I sold a put for Wells Fargo. It ended up executing, and so I had to use $2,400 to buy 100 shares at $24 each share. And then I sold the call and I made $13 off that with this. So now if I close this one, to close is going to cost $2. And now we just got to wait for it to execute. And when it does, then we can sell the call for next week and make premiums off there. Okay, Wells Fargo did now execute. So let's go trade options, sell a call for next week. And I'm going to go ahead and sell it at 25. Because if we make $33 divided by 2,400, which is how much I used to buy the 100 shares, times 100, that's 1.4% back in just this week. But I also made $100 because I bought them at 24, selling them at 25. That's a $1 difference times 100. That's $100. So let's go ahead and do that. Sell a call for next week, next Friday, receive $33 in premium. Okay, so let's let that one execute. As you can see, TNA and Wells Fargo haven't executed yet. So if for some reason I have to adjust the premium, I will do that. But let's go to AMD right now. AMD, I'm going to close this contract for $12 at each one. So I'm going to have to spend $24. So let's go ahead and do that. Submit. Okay, so now it did execute. So we can go to AMD and we can go to trade options. We can sell a call for September 4th. I ended up buying these at 85. You can see it in the tracker right here. I bought them at 85 on the 7th. So I want to sell them, way over that. So if I sell them at like 88, I'm making $300 per contract. That's $600 in capital gains. But if I sell them at 88, I can also make almost $300 in premiums. So if we make $300 divided by, that's $17,000, that's collateral, and multiply that by 100, that's a 1.8% return for the week in just premium, and that's not including the capital gains. So that's perfect. Let's go ahead and do that, and there we go. And they actually filled, and as you can see, TNA actually filled it again. So Wells Fargo is the only one that hasn't executed yet. TNA and AMD did, and now I have that buying power because the premium gives it to you right away. So I'm gonna update it here like I always do. So you can see last time from my last video, the worst week that I had, I made $75 in premiums, which was complete trash. But then the week after that, made 157. The week after that, made 100. This week I kind of screwed up a little bit too, because I had a good call. I made like $200 off this premium, but then AMD shot up. Let me show you guys. AMD shot up earlier this week, so we were good here, and then it shot up almost to the strike price at 87, which is what I had in. It's 86.84. So I ended up canceling it at a profit. I made $11 per contract, but then when I sold it again, it was worth almost nothing, and that's because of data, which is a decay. As as you get closer to the expiration date, it goes less. I got emotional. It's everybody wants to stick to the plan. I wanted to stick to the plan, but then I saw it go up, and I thought it was going to continue going up the next day. So I got emotional about it, canceled it, waited for the next day, and the next day actually went down by a lot. And so that's just the way it is sometimes. But these trades, I'm gonna add them in here. So now that I added everything, this week's premium went down a little bit because everything that I used to cancel the contracts or buy my collateral back or my shares back, it brought it down. I made next week's premiums, and next week's premiums made on me almost $400, which is amazing. So using a collateral about $23,000, I made a return of almost $400. That's a 1.7% return. So we passed this time. Our goal is to get 1.5% every single week. So these couple weeks I kind of been screwing up these past 3 weeks, but this week finally some light shined, and I got $400 in just premiums. And that's not including capital gains, which if that does happen, then our total profits will finally be positive. For example, if I change, let's say they do execute, right? So this will be 2,500. So instead of 24, it's now 25. And let's say this one doesn't execute, so it's 0. And let's say our AMD does sell, so I'll get $80,800 per contract. And so just from premiums, we've made almost $2,000 in these 10 weeks. From capital gains, assuming they do execute, then that's $3,000, and in total that's about $5,000. So if we look at our 10 weeks, we started off with $15,000. That was 626 when we started off, and our total return is $5,000. That's a 32% return. So if we would have taken those $15,000 and put it into an ETF, the normal yearly return is 12%. So after 10 weeks, you're looking at 2.31%, which is not bad. 2.31 after 10 weeks, that's just, that's normal. But for us selling premiums and selling the wheels, doing the wheel strategy, selling puts and then selling the calls, making premiums weekly, and then making money off the capital gains, we've made 33%, which is amazing. And yeah, we do get taxed a little higher, but it's all good. All right, guys, thank you for watching. I'll see you guys in the next one.